Lentus Asset Management aims to compound client wealth in excess of inflation with a low risk of capital loss. Tonight, Nic Norman-Smith, portfolio manager at Lentus Asset Management, joins us in studio to explain what investment opportunities they see within the oil sector. But before we get there, I'd like to talk to you about this week's big news, and that obviously ABSA's profit warning and their lack of communication since the profit warning, which has investors up in arms, quite frankly.
Yeah, I think it is a bit concerning, Bronwyn. You know, they've said it's, I think, I'm not sure the exact detail, but the word is that it is a provisioning error, and it's got the market concerned. And as always in these kind of things, you know better than anyone. And in media, communication is key. So, you know, radio silence is poor. I don't know if it's been decreed by Barclays or why, but you know, I think investors would certainly like to have Maria Ramos out.
And it's just perpetuating the negativity, the lack of communication.
Bronwyn, they've lost 12-13% of their share price in the last 3 sessions. They've done well. I think generally we've had a very strong first half in financial shares. You know, our bank shares have been up, but when you come back 12%, there's a strong message there, and I think it's taken the market by not by surprise. It's concerning them. Particularly that they have lost so many senior executives as well. One's wondering whether they have this bank under control. I don't think there's a contagion. I think people are feeling quite happy about the other banks that they have a better balance in their book, but it is concerning ABSA shareholders.
I mean, of course, the concern is, you know, most of the banks rallied quite nicely earlier this year, and what we saw was during the crisis they took massive provisions and wrote off a lot of bad loans and took, you know, provisions for bad losses. Now what's happened is those have started being written back, and that's been a lot of the earnings growth that you've seen from the banks has been the writing back of these provisions. So actually things aren't so bad. So we've gone like that. Now ABSA said, oh wait, actually our provisioning is not so bad. And obviously what the market's saying is, whoa, is this the turning point, or is this just a, you know, company specific?
Well, it's going to be an interesting story to see unfold, and perhaps ABSA management will be encouraged to come out and start talking to the market and to journalists, just to assure everything and everybody that, you know, this is a once-off, there's nothing more afoot.
You know, for me, the bigger worry that this just points to is obviously the housing, you know, these are mortgage loans that we're talking about. Now, South Africa's housing market has pretty much stagnated over the last few years after having a phenomenal run. But if you look at the underlying valuation of South African houses, take a simple rental property and look at the rental yield that you're getting, it's pretty poor. You're probably netting maybe 5%. I don't know what the broader figures are, but certainly from people that I speak to, that's not a great return when you can put your money into a number of blue chip stocks and earn the same amount. So the bigger worry for me is, okay, fine, maybe I've got some provisioning wrong. I don't know if it'll happen or not, but if we see a downturn in the housing market, then the 13% drop is going to look like a walk in the park. So it's just something to be aware of when you're investing in these banks. If you look at the valuations, they're not hugely steep. You know, our banks are probably trading at between 1.6 and 1.7 times book, which is not record lows, but they've been a lot more expensive. So provided that book is valued correctly, you'll get a decent return at these levels.
All right, so as I said, we'll watch the space going forward. Let's move to Sasol, because I know you said opportunities in the oil sector, and obviously after their CFO update today, it's worth chatting about this stock. David feels that it is a very good buy at current levels, 339 Rand. But as I said, it is a case of herd mentality, because every fund manager and his dog owns Sasol.
It's interesting because, you know, you said herd mentality, but then you look at the share price and, well, people might be saying they like it, but clearly there's more sellers than buyers at the moment. We're normally quite nervous of the herd at Lentus, but I have to agree at you know, at 339 Rand at a price earnings ratio of around about 7 odd. It really does look cheap.
So you're all convinced then that the oil price is going to bottom at around $90 a barrel. Are you, David?
Well,
are you convinced?
I think you have to understand markets today. There's a huge element. You've got 2 elements. You know, you've got the traders and you've got the investors. And I think at the moment you've got very heavy trading. People taking short-term positions where they see oil price coming under pressure. They will take derivative instruments, or they will make sure that the market moves in a certain direction. So you've got to measure the longer-term investors versus the short-term, and you can get these kind of fluctuations and that. And I think this is where you start to see these kind of heavy movements in one direction or the other.
If you look at the you know, what drives the oil price, basic economics, supply and demand. Okay, I think we're all in agreement that demand is pretty high for oil, and it's not about to go away. There's a set amount of oil that can, that
in
is
the
getting
world. There's
pitched
a
in the
finite
world.
amount, and unless somebody finds a substitute, which with today's technology is not something completely impossible. It's completely possible that somebody can find a great substitute.
People have
for
been
oil.
saying that for 100 years, and maybe it'll happen in the next few, but on a probabilities basis, I'm pretty happy to take the bet that they're not going to.
We're starting to go to the moon on a regular basis. You can do trips to the moon.
No, I think your children will, might not use
so much oil.
So much oil
we can generate
fossil fuel, but I think we'll continue to do so.
We can generate wind power, we can generate solar power, but at the moment, it's not cost effective. It's a heck of a lot cheaper to suck some of that black stuff out the ground and use that. I mean, we are seeing natural gas prices, we're seeing a bit of a glut at the moment. So the discrepancy between those two is huge, which is great for Sasol because they can convert that into fuel. That's obviously,
so at the end of the day, this is a bet on the oil price, a finite supply that we're going to go back above $100, $125 a barrel?
Well, the marginal cost of production, and that's what you need to look at after all of this, is around $80 to $90 a barrel. So unless someone finds some oil reserves that are significantly cheaper than that, okay, at these oil prices, we're not going to get any new supply coming on, and the balance, it's the same story as we have with the platinum sector. There's a bit more opportunity for oil discoveries than there is for platinum, but it's pretty similar. It's not like a lot of the other commodities. It's hard to find new oil, and it's a lot more expensive to find it. So fundamentally, I'm not saying oil couldn't go to 50 in the next few weeks, but fundamentally at $80 to $90 a barrel, oil has a massive underpin. And at those kind of levels, Sasol's still going to make a lot of money. And interestingly, if you think Sasol's cheap, the foreign oil producers...
Well, that's what I was going to say. At Lentus, they like to throw around these foreign stocks, and BP is a stock that you have identified as one of the oil stocks to play.
So it's trading on a price-earnings multiple of 5 and a dividend yield of around 5.5%. There are a number of very scary things about BP. We know about the Deepwater Horizon spill. They've got 25% of their reserves in Russia. The Russian government could take in tomorrow, we don't know. But if you look at the valuation, PEs aside, because all of the oil majors are on single-digit PEs, if you take their oil barrels and you say, look, what's the enterprise value versus what are our oil reserves? BP is at a mammoth discount. So even if you think that the Russians are going to steal their assets, the assets are basically valued at zero anyway. So there's a lot of downside priced in. They've expensed around $40 billion on this oil spill already. So what has history shown? History has shown that any of these big legal liability cases, it takes a lot longer than one thinks, and you end up paying a lot less. And they've paid a lot out already. So yes, there's a risk that the legal expenses are mammoth, but on a probability basis, and that's all that we're doing in investing, the probabilities are pretty good that it's not, and it's priced in.
But you don't have to go. If you feel the risks that Nic is talking about now, you can actually spread it a bit. You can go to Royal Dutch Shell, Total, Chevron, any of those companies, because I think you're getting equal kind of dividend yield.
You can get ExxonMobil. ExxonMobil is the bluest of blue chips, and that's on a multiple of about 9.
But then if you follow your train of thought, gentlemen, and you say, right, Sasol is a sure thing, then why aren't you just going full into ExxonMobil, Chevron? Shouldn't that just be your play going forward?
Sure. I prefer it to some of the mining stocks as well. I would rather have them with their very heavy yields as well. Yeah. If you really want, there's gas fields off Mozambique. If you want to play that as well, which is huge, I think we underestimate it. There's a company called Anadarko that is.
Anadarko, it's coming to fruition again. Are you playing Anadarko?
I own them.
You own the company.
I'm talking to my book now.
You own the company.
I own shares in the company.
You were slow on that uptake. I own them. It sounded like he was heading up Anadarko.
But it's a wonderful story.
What about Anadarko? Too small for you?
I don't know enough about it specifically, and to be honest, I can buy one of the blue chip oil majors at earnings at a PE of 5. I'm not even going to bother with something that maybe has some more upside, but
could be the 10-bagger of the future.
No.
That's short-sighted thinking.
I'd much rather take the much more certain 5-bagger than the potential 10-bagger. That's how you compound capital over time.
But I think what you can do is you can spread your risks and embrace all of them. I still think
yes, you who has 100% exposure to equities is a great. You still do.
No, I still have 100% exposure to
fantastic
equities.
risk diversification there, or asset
I've
diversification.
got a lot of companies. I've got oil. I've got various
but it's
things.
clearly in the equity space. space.
certainly not buying bonds.
What else is offering value out there?
We've chatted about technology companies till we blue in the face. Those are still looking attractive. We saw Microsoft recently.
What about Nokia?
Nokia, we've avoided Nokia for the last 5, 6, 7 years, and we don't hold it. But I have to say, for the punters out there, at current pricing levels, it's probably worth a punt. I mean, the assets alone, the factories, the brands got to be still worth something. Someone's going to take them out, whether it's a Chinese. The question, and they're sitting with a net
There was an
cash.
article out today saying that RIM and Nokia have no future. Do you think that could be a reality?
It could be a reality, but I don't think it's a Kodak.
No.
It's a tough business, and that's why consumer products businesses are very tough businesses to invest in. But there are assets in there that are useful. So their market cap, Nokia's market cap, is not very different from the net cash on their balance sheet.
All right, let me put this question to David. If I say to you, you could either invest in European banks. In fact, let me make it a little bit. You could either invest in Spanish banks, or you could invest in Nokia. Those were the only two choices in equities. Nokia.
And you know why? You know what? If RIM, which is BlackBerry, and Nokia would stop trying to compete at the top end and keep up, and just said, we're just going to produce, like Nokia, a cheap phone that we can sell, that people will use just to make phone calls or send SMSs and not try to be Apple or anything like that, you get massive amount of sales plus cash. The same thing with BlackBerry. Just stick to data and to voice. That's all.
The risk of Nokia is, does their cash run out before they get taken out? That's pretty much it. So certainly it's not for the faint-hearted. Something like BP, I'm very, very confident that that's going to work out well. Nokia.
Are you going for Nokia over Anadarko? I just like the name Anadarko.
I don't know Anadarko's valuation prospects well enough to make that comment. So, but
sitting on the fence.
Probably yes.
I just like the Mozambique. I like where they're exploring, and I think Mozambique's going to be a huge, huge field that's going to change the face of Africa as well.
And one final one, just because it's perfect timing, because we chatted about Vivendi instead of Naspers, which was the French cable television business which everyone hates. They came out with some news today that the CEO might leave. The stock's hated so much that it's up 6% just on that news, compared to Naspers, which had reasonable results and what's down 4 or 5%, I think, today. So just proving once again, you buy the stocks that are cheap, that everyone hates. You don't need much good news for things to go right.